Hello everyone, my name is Aki, co-founder and CEO at Bambu, one of the startups actually just down the hall, so if you have any questions later on, you can find me there. We're a Robo advisory company, so we're going to talk about Robo advisory, maybe how it pertains to the, let's say, Asian market. We'll touch upon some insurance points here and there, but if you're familiar with Robo advisory, of course, it would be mainly focused currently on investing and wealth management products. Just a few words about Bambu to maybe set some context of why am I talking about this. So Bambu is a white label Robo advisory platform, which means there's no Bambu app that you can download and give us your money. We don't work with consumers directly. We work with financial institutions. So these are some of our partners, clients and investors, Thomson Reuters, Standard Chartered Bank in Templeton, and finally Wavemaker partners. So we work in the retail, affluent, and private banking segments, offering white label automated solutions for saving and investing. One of our clients is in fact one of the biggest insurance groups in the world. So we have worked on, let's say, insurance use cases thus far, and we can come back to some of those points later on in the talk. So, how many have never heard the word robo-advisor? Anybody? Oh, this would be a first. Very savvy audience. So, definitions-wise, to kind of clarify the context, the way I look at robo-advisory is just digital transformation. So, same thing that happened with Netflix and Amazon and so forth, Uber, the obvious example. So it means we're taking some business which is quite offline, quite slow, based on paper, based on humans, lots of mistakes, slow processing times. That defines wealth management pretty much, and of course, largely insurance as well. And digital, by definition, is fast, cheap, accessible, pervasive, ubiquitous, easy to use, all these things, right? So by definition, it's better. There's pretty much no industry where making it digital would make it worse, unfortunately. Or fortunately, it depends on your viewpoint. So for insurance, for wealth management, it's really defining who you sell to. So in a lot of ways, wealth management insurance are quite heavily focused on rich people. You know, the people who have the fattest margins, the most money to manage, etc. But really, if we think about it, everybody needs insurance, everybody needs wealth management. So digital allows us to open up the field, offer it to even perhaps the unbanked in certain countries. But it definitely changes how we do business, right? So particularly in insurance, you've got bank insurance, you've got agency channels, a lot of moving parts, a lot of complexity, a lot of human workforce. So something like robo-advisory can, of course, be quite disruptive, in that you can have competitors, say like, for example, FWD, we've got Singapore Life now in Singapore, so there's some people who are innovating and taking on more of a digital business model, which is causing some headaches for some of the other players. So this slide, quite a lot of context, but this is kind of the breakdown of what are the typical challenges. These apply pretty broadly across wealth management and insurance. And also talking about some of the opportunities, like how can we benefit from this instead of just kind of crying about it. So insurance particularly limited by relationship manager, financial advisor, agent productivity, right? A certain amount of hours per day, you need to travel to places to meet with clients, you need to gather lots of paperwork information, you need to upload it into databases, etc. You need to remember your clients' birthdays, all these kind of things. So there's a certain amount of productivity that each human has, and you're limited by that. I think my sort of favorite example of this is Prudential. I don't know if everybody here is from Prudential, but having up to 250,000 agents in Indonesia, just that sort of boggles the mind. It's an army of humans kind of working for them. So that's pretty extreme, but of course, if you're going to compete with those guys in Indonesia, are you going to then, what, hire 500,000, a million agents? No, where does it end? But of course, what we can do with automation, with robo-advisory, with technology, is not just replace the agent. I mean, of course, there's some areas where that will happen, particularly in the lowest segments for retail, it's difficult to justify the human inputs because it introduces cost and time. But let's say in the affluent, emerging affluent, high net worth, private banking kind of segments, of course what we can do with the RM is give them tools. You know, we work with Standard Chartered Private Bank, for example, and we offer their financial advisors tools to increase their productivity. So instead of having to do all the steps that they currently have to do, can we automate some of it so that they can focus on the actual relationship rather than the administration aspect? And I've talked to some private banks that say that out of a typical working day, financial advisors have 2 hours to meet with clients. 5 hours or more of admin. That's just crazy. Okay, so then in terms of distribution, this is very central to insurance, obviously. In wealth management, this would typically coming down from the asset manager who manufactures the product all the way trickling down through distributors, brokers, banks, insurance companies who actually then at the end of the day, somebody's kind of selling this product, maybe the agent or someone else. Now, what's happening, so the classic example of this would be Vanguard in the US offering Robo advisory, self-service, directly to clients. So they're skipping all of the people in the value chain and just going directly to the consumer. And I think this will happen everywhere. And it doesn't mean it's just the asset managers who will go direct to consumer, but we will start challenging bank insurance partnerships, etc. Of course, some insurance companies have their own asset management arm. What do they do there? It's going to start introducing, I think, quite a lot of friction into these channel partnerships. But then again, for you, it's also an opportunity because you can take a digital-only approach. You can go to new markets, new segments that you've never had access to because you were limited, for example, by the availability to hire, recruit, work with agency. You could actually go to a new market where you're not currently and just launch in 6 months, purely digital. Cost is maybe a few million, including all your marketing costs. If it fails, it's not so bad. You can try again. So that this digital introduces this concept of experimenting. You can't really experiment with bank assurance partnerships. It's kind of a 10-year commitment, billions of dollars, etc. So I think robo-advisory or digital in general allows you to take a light step in a direction and see how it works, adjust, try again, go to different places, go to different segments, etc. So at the bottom, there's 2 points here which relate to fintech companies like myself, startups. So the challenges typically for institutions are around customer experience. There's a lot of legacy technology, a lot of stakeholders, a lot of, for example, input from legal, compliance, risk management that are sort of hindering the development, the rapid development of the customer experience. So it's kind of now lagging behind a lot of different industries and startups. So obviously fintech startups, if you leverage their technologies, they typically have better customer experience by definition because they're not hindered by the technological kind of legacy layout that big companies have. They're not hindered by teams of compliance and risk management, legal. They're taking a more bold stance, which can move things forward very quickly. So you can leverage these fintech companies in your own business. The other aspect is, I think, just the difficulty of getting digital right. You now have a lot of these innovation labs. You've got a lot of chief digital officer type of roles. You've got people with UX in their titles, etc. But at the end of the day, they're also hindered by the politics of the organization. So there's only so much that they can do. It's not a skill set matter only. It's are they being held back by not disrupting? And I think that's also another opportunity. Is you can take a fintech startup, use their technology, leverage them, do some trials, do some POCs without having to kind of set up and leverage and go through all the red tape. You can do these little tests and trials. So I think these are 2 ways in which startups can be used. Of course, this applies only to B2B startups. So that's why, for example, Bambu has a B2B model. Because we think in particularly the Asian context, there's a really big opportunity for B2B fintech and the industry, wider industry to collaborate. Because let's say as a startup, it's going to be pretty tricky for us to get licensed in 10 different markets across ASEAN and the wider region. How long is that going to take? 10 years? How much money do we need for that? I don't know. 10 million, 100 million, anybody's guess. So it's a pretty tough undertaking, but what if we just leverage the existing distribution channels that institutions have and put our technology in the hands of as many people as we can? So that's kind of the philosophy that many B2B startups are taking. And also why I think it's particularly popular in Asia. If you compare that to markets like the US, obviously you have a massive market, or say China, massive domestic market. You can quickly, as a startup, if you're able to get licensed in that one country, you can do a lot of things. You can grow your business to a massive scale, but not in Southeast Asia, really. Okay, so this is a slide. I think this is maybe a few months old. Yeah, it's from April 2017, and these are pretty much the major robo-advisory players in the world. There's a couple things you can see from here. One is, obviously, it's very much weighted to the left, i.e. the West, US, that's where most of these players are. And if you make this weighted by AUM, it would be pretty much US only. You wouldn't even see anybody else on this map. So the obvious reason for that is they got started. In the US, that's where robo-advisory was invented, if you will. So that's where it started. There's names like Betterment, Wealthfront, Personal Capital, who all have now AUMs in the billions. So what about Asia? You can see it's pretty quiet there. In Singapore, we've got a couple, Australia, one, India, a few. This number is, of course, increasing. I think probably since April, there's a few names you could add to the list, and next year, I'm sure there's going to be many more. But it's also, we're thinking about how are these businesses going to grow? Because in Asia, you also have less funding than in the US. It's more diverse, it's more fragmented. So that's always a challenge. I think a big milestone in this was actually the funding that we did recently with Franklin Templeton Investments. So one of the top asset managers out of the US, or in that market, the most active market, decided to back an Asian startup. So I think it's showing that actually that's probably something that's going to happen more and more. So investors from the big markets, say China, US, maybe Europe, will come to Asia to look at a kind of proving ground. What are the interesting technologies that are working here? Can they be brought to other markets? How can they enter this market and look for new distribution channels, etc.? Okay, a couple words about your customers. So, as I mentioned or hinted at the top, most financial institutions are really targeting or caring about rich people. So like this rich white guy here is your classic customer. You deal with them in person, they like emails, they like letters, they like newspapers, they go to conferences like this, and they kind of are sold to in general, They are sold products. They don't buy anything, they're sold. But really what's happening very fast actually, it's almost unfair to say customer tomorrow, it's like today or actually 5 minutes ago. This is something that we should very much already be thinking about, that the way you engage with these new clients is quite different. I think particularly for insurance, the last statement is true, they're buying products. They don't want to be sold to, they don't want to get pushed products, they want to make a choice. They want to hear their friends' opinions about their choices, they want to share their data, they want to engage actively. So this is something that we will have to really think about in digital. How do we reach these people? Because it's probably not going to be the same channels that we're using today. Okay, you can't really have a robo-advisory speech without a picture of a robot and talking about AI, so here we go. I think that the message here is just talking about the abilities of AI as it pertains to financial advice. So that could again be wealth or insurance. I would argue that in many ways the abilities are already above humans for most things. So if we think of, for example, capturing or conversing, you already have things like chatbots. And you can make, if you spend the time, a chatbot more intelligent than a financial advisor, guaranteed. It takes time, it takes a lot of content, but it's doable with the technology of today. In terms of things like, let's say more quantifiable things, like planning, recommendations, optimization, it's not even a comparison. A pocket calculator would probably do it better than a human can. So a robo-advisor or automation platform, AI platform with machine learning, AI, can leverage all of the data that's available in real time to to optimize and personalize individual clients' needs, no question. I think where it gets more interesting is the little dotted line to the heart. You could put something like understand, empathize, trust, but I think actually from a kind of more quantifiable point of view, it's about understanding. You know, the chatbot doesn't understand really what you're about, what you want. It will kind of take in the facts, but it's not really giving you that human interaction. So I think that's where the work remains, and a lot of that has to do with natural language processing, which is a very active field within AI. I think once we have the ability to produce, understand, generate, analyze perfectly human language in any language, then it gets very, very interesting. Because then you're potentially not able to discern whether you're actually talking to a human or not. For example, on the phone, you know, you might be thinking you're talking to a human, but you're talking to Siri or Alexa or somebody else, right? But in terms of, again, engagement on an ongoing basis, reaction, whether it's taking into consideration market data, changes in your life, again, it just wipes the table, because it's able to do that on a real-time basis based on a wide selection of data. So it's not just based on emails, but it could be social data, it could be weather data, it could be market data, etc. Just the final thought to leave you guys with, if you have any questions, but is I think insurance in particular is a very visible business. You know, you see the people in the shopping malls selling you the insurance products, you engage with them, it's right in your face. But if you think in a lot of ways, say of Uber, going back to the digital transformation, they've made payments invisible. You order the car, you go in the car, you get out of the car, you don't think about payments, it's happening in the background. So I think increasingly we will see these financial transactions of all kinds becoming more invisible. They're something that happens to you, it's part of your life, it's automated, and it's optimized, and it's not something you have to make a conscious choice about or go out there and actually seek. It will just be embedded into the relationship you have with an Uber or an Amazon or telco or other provider, right? So it's not just going to be, I think, bank assurance that is going to be the key distribution channel. I think we have to open our eyes and ears to other potential partners in the future. That's all. Thank you very much, guys.